right. Good morning, everybody. Back at it again. Hope y'all had a good weekend. All right, so yeah, we got Trump speaking later. All right, it's a press conference, okay. All right, but how's everybody doing this morning? Let me know in the comments how you're doing. What's up, brother? Nutty Fafa, did you go and get my weekly daily bias checklist? For those of you that don't know, I have a weekly daily bias checklist that's going to help students that want to follow along kind of see some of the things that I'm looking for. There's things that you can check as you're going through the analysis process as I go through it. It'll help you have a reference to look at, so then you can eventually not even need a checklist, and just it'll help you improve. So when you downloaded the PDF, did it let you click the button in your email? I was getting some mentions that it was having some issues, so I was trying to fix that yesterday. Hopefully I was able to do so. Let me know, Nutty Fafa, if it went smooth or not. Because if not, I gotta go figure out what the hell's wrong with it. It was hella annoying. But you know. But yeah, so we want to start this off also by mentioning the fact that the day before, the day of, and day after holidays are classified as low probability. So today we're not having insane expectations, although if you are in my private Discord, or if you're in my free community, or if you even watch my YouTube video on Sunday, you'll know kind of what the idea is, what we're looking for. We're looking for possible retracements to start the week, lower to go higher in the indices, and higher to go lower in the DXY. And until our invalidation levels I mentioned are violated, which we'll discuss a little bit more today, unless those are violated, we'll stick to what we're talking about. Yeah, the PDF, it's not like you can't digitally fill it out. It's kind of meant to print it out. I'm not really too sure how I create a PDF that's digitally like editable for the recipient. If any of you guys know how to do that, I would love to sit down with you and figure out how to do that, so then I could serve you guys even better with the different checklists that I have coming out, or any other stuff that I make. If you guys could help me with that, I'd really appreciate you. But yeah, until then, just print those things out, put them on your wall, and you don't even have to fully fill it out. You could just look at it as a reference and just write it on a piece of paper. Aside from that, and just use it as a template as far as like what you should be paying attention to on each time frame, and just some of the key elements that are important to be aware of. Which, of course, the whole PDF that I made, all the contents we talk about every Sunday. You know, every single one of those things gets talked about. So yeah, but yeah. So like I was saying, day before, day of, day after a holiday, low probability, high resistance for the most part. In many cases, doesn't always happen that way, but most times it does. So if there's probability for something to happen more often than not, you want to have rules that cater to protecting yourself in those types of environments. And looking at things from a low probability standpoint, the day before, day of, and day after a holiday, the day before, day of, and day after a holiday, if you set rules around that, you'll protect yourself in a lot of cases. Obviously, it doesn't mean it's going to happen all the time. Doesn't mean that every single time a holiday comes, nothing's going to take place. It's just one of those things, one of those scenarios where it has proven over time that it's a little bit cloudy. It makes because there's holiday volume, smart money's on the sidelines. The market was closed, so orders are pumping in because of the people that didn't get a chance to get in before the holiday, or some people that didn't know there was a holiday. So all those factors, plus it being at the beginning of the week, right, on a Monday, all those factors just put things in a perspective of low probability and a likelihood of high resistance. So yeah, sorry about that train. If you could hear that stupid train, always rolls by my house. Good morning, Eddie. Appreciate you hopping on, brother. Hope you had a good weekend. Yeah, so most likely, if today or tomorrow doesn't really do much in the market, we will probably look towards Thursday and Friday for a potential opportunity, because that's probably the best idea in terms of identifying when things will open up. If they don't open up and choose to be kind of hectic this morning, so just keep that in mind, because we are in our rules that relate to holidays, that being the day before, day of, and day after, are high resistance, low probability conditions. Our risk management model and protocols surrounding that are half the risk you normally take, and you're only allowed one trade, one attempt. If you must take a second attempt, again, you have to drop your risk by half again. So if you risk 1%, for example, normally, your entry today should be no more than half of what you normally risk. And then if you take a loss there and you feel like you have to take a trade, which is a problem that needs to be fixed, if you are dealing with that. But if you do end up having to take a trade, right, or you want to just participate, you have to do it in the safest way possible because of what I just mentioned. So you would cut that half normal risk that you took because of the holiday rules, you cut it in half again. So then you'd only have 0.25% on your second entry. That's because we're in a condition that could very well be unfavorable for things to take place in a clear, precise manner. Referring to like how it normally is. It's just there's times in the year, times of the month, around specific events that come out that you have to be aware of. And you want your equity curve to be nice. You don't want it to be a sharp roller coaster up and down, looking like a parabolic crypto market, like a meme coin. Okay, like you don't want it to look that way, because you could look at your equity curve and see what the stress was just by looking at the equity curve, and you don't want to have your mindset and mental capital being spent so much, and then allow for negative thoughts and doubt and all this nonsense. It's simply solved by just avoiding days like this, lowering your risk, and being proactive for these types of things. And when you take a trade and you lose a trade and you drop your risk by half until you make that initial loss back, that's called a regressive risk management model, and that's something ICT teaches, and it's something that once I started doing it, aside from all the other skill sets I've had to learn over the years, the stress levels drop in terms of trading, because you're not going to blow your account if you make sure you follow your rules. Okay, there's a reason they're there. So, and part of that has to do with saving mental capital and protecting you from yourself. We all need those boundaries, because we're human, we're not perfect, and things happen sometimes. All right, so let's start digging into what we see here. So over the weekend, I said that we have to see how price responds to this level here. Is it going to use this as support and go higher? That would support bullish DXY. Or is it going to use this order block, this fair value gap in here, and use this volume imbalance, new week opening gap, yesterday's holiday gap? Is it going to use these areas in here to reject and not allow for price to get back into this order block much and push lower? Or is it going to use it as support and push it higher? So far, for the moment at least, I'm going to anticipate this possibly looking to be used as resistance, but we'll see what takes place. Overall, we're in a range-bound market, Again, it's a day after a holiday, so things are probably not going to do anything spectacular. It could not, right? But we're, again, setting our expectations because of our rules and understanding of how holiday volume presents itself in the marketplace uh, generally. And generally, it doesn't really do much because people are just getting back in the groove of things, right? So that's kind of what we're going to watch. We do have these equal highs up here. So again, if the levels I mentioned here hold and we start running higher, then that starts building our confidence in the fact that price is possibly going to want to stay in a bullish capacity. That would then pull DXY higher because the yields, or US 10Y or US 30Y or US 5Y, right? That's the symbol for the yields. And then the symbols for the bonds that basically influence and dictate what the indices and foreign currencies are going to do. That is there right here, the trio for that: ZB1 exclamation mark, ZN1 exclamation mark, and ZF1 exclamation mark. And again, the bond yields have a heavy influence over what DXY does. So that's why it's important to start here and look at this before you go into other assets. And then, of course, like I said, the bonds influence and many times dictate where the foreign currencies like GBP, USD, Euro USD, and the indices are going to go. So again, that's why we start here, right? I get a lot of questions from, especially in the last week. Why do I start with the bonds and yields? Can't I just use DXY and the 3 indices? Some people think it's too much to look at these, but then again, I ask, isn't it too much to blow your account and be inaccurate and just come and all the time be inconsistent? Wouldn't it be better just to suck it up, right? And just get used to identifying these other markets that are extremely influential, right? So your results can get better. But yeah, so again, we want to observe what these areas here are going to do in price. Is it going to look to reject or is it going to run higher? Again, we have the equal highs up here, which are kind of suspect, plus a fair value gap. So if we do see that this level holds as support and starts raging to the buy side, possibly even breaking through the midpoint of this order block here, if that takes place, I'm 100% confident that the highs will be blown out. Right now, if you take the low from this low here, because it took sell side liquidity, you take this high here because it took buy side liquidity, that's our current dealing range. That's our current range of opportunity given this time frame. That's how you navigate a range, right? Depending on where price is at, where it's headed, so on and so forth. So if you take your fib from this high to that low, equilibrium's right down here. So we're hanging around the midpoint of a particular dealing range on the higher time frame. That is another indication that we are in a condition of consolidation, right? So, I talked about that a lot the last couple months. But just for those that may have missed it, that's one indicator in terms of identifying the condition. Are we in consolidation or are we in a fast-paced trending environment, right? So hanging around equilibrium on the higher time frame in a particular higher time frame range generally is not a fun thing to participate in or try to push for a trending environment. All right, so hope that made sense. But yeah, so that's what we're looking for here, right? So we're going to observe that. Similar thing in the bonds, but just the opposite. If we take some of these annotations and put them on, we could see a weekly fair value gap here. We're dancing inside of it. So we'll see what happens with this. We have a bullish order block here. So if it breaks through the midpoint of this order block and starts going lower, I'm confident that it's going to target these lows down here. Otherwise, I'm going to anticipate these levels I have highlighted here to hold price in some capacity and then eventually try to push price to the buy side. We could see how, right here. So this is a 2-day bearish order block. That's what the order block labeling is here. So we'll see how that influences things too. It's another level for us to watch as resistance. If price does want to try to dig lower and start targeting some lower prices, like I said, the last line in the sand is the midpoint of this order block here, the midpoint right here. So if it closed below that, I'm confident it's going to reach down below the lows. Otherwise, price is still in a like upside capacity, right? So we're in a consolidation. Like I said, if it takes buy side, takes sell side, that's your given range. So you measure it from high to low. We're right at equilibrium. So it's not ironic or unreasonable to see price consolidating, because generally that's where price likes to hang out and be held if price is in a consolidation, hanging around higher time frame equilibrium price levels. Right? So we'll see what the delivery is going to be moving into the open. Trump speaking later, so we'll see what takes place with that. Again, low probability. It's the day after a holiday. The day before, day of, and the day after are classified as low probability, high resistance. And it's pretty interesting how that rule, coupled with the fact that we're hanging around equilibrium, paints a pretty beautiful picture in terms of what the conditions currently are in these particular assets, those being the bonds and yields, which again heavily influence what the DXY, foreign currencies, and the indices are going to end up doing or have a likelihood of doing, right? So yeah, we'll see what takes place here. Again, line in the sand is the midpoint of this. So let me just label that real quick. Hope you had a good weekend, by the way. So yeah, let's. All right, daily. So why would the 50% be the line in the sand for this market here? Right? Well, if you think back with the video I did over the weekend talking about validation and validation principles and that whole process, simplistic validation and validation process I described, if you look at, we have multiple fair value gaps in here. Okay, we have the order block high, and then we have the midpoint of that, right? So if it was to stay down below this, 100%, if we break down below this low here, it's pretty likely, more likely than anything else, if it was to break down below this low, to then start looking towards something like this, right? But in order for us to get to this low, we have to paint a picture for that as well. So given the fact that there's a fair value gap here, there's an inversion fair value gap here, possibly, this blue one right here, and then we got the monthly fair value gap layered, and then we have a weekly fair value gap layered as well. So you see how all these different levels are layered on top of one another, and if it can break down below this as well, it's a lot more likely and more probable that it's going to go lower. But if it holds, then obviously we could continue to seek possible buy side. And that in this case, we have the high here, we have the wick, we have this high here as well. Okay, so we got to see a little more evidence in terms of what price wants to do, especially given the fact that it is a day after a holiday, right? So yeah, until this is broken, I'm going to assume, given the fact that we have been in a pretty bullish capacity, I will assume that price should hold and continue to drag the indices higher. At the moment, obviously it's the beginning of the week, so things can go opposed to what our overall narrative is because of power 3. So we're going to keep that in mind, obviously. But yeah. And then once our invalidation levels get hit, we could then easily adjust and kick back in line with what the storyline is with the marketplace. By the way, if you get value from this content, and you maybe have people that you think would get value from the content as well, definitely let them know. Don't forget to like and share the video, and leave a comment, any type of questions or anything. And yeah, and I mentioned the other day I have a weekly and daily bias checklist for those of you guys that do hop on here. If you haven't downloaded that already, definitely go get that. The link will be in the description of this video, but it's also on my link tree in my Instagram. So definitely go get that. And if you have questions about that, I'm probably going to make a video in terms of how to navigate that. Just, for those that aren't really regular viewers, just so, they can get some value from it as well. And maybe learn a thing or two. All right, so those are my opinions on these two assets. So now let's move on to the currencies. Right, I said that starting the week, we have a fair value gap down here on the daily chart. I said that it's probably likely if it's going to go higher. It has been pretty bullish the last couple of days, right? The last, 1, 2, 3, like 4 or 5 days. So I wouldn't be surprised if they give a retracement. Ironically, we're at a daily wick midpoint. That could be the higher time frame PD array that sets us up with our counter trend idea to retrace and then possibly go higher. This is another topic I talked about on Sunday as well, framing counter trend ideas. I also have a video on my YouTube channel specifically touching on that process, because I have a couple traders that have came to me with questions that are contrarian, and it's an extremely helpful tool to add to your toolkit if you are maybe counter trend minded, or if you just want to be able to frame out when price could retrace or how to engage that type of environment, so then you can just add even more opportunities to your toolkit, right? So you can have a trending navigation tactic, which that's what we talk about for the most part, but then you can also have one that can frame the logic around retracements and how to navigate that, how to get involved, or just how to read it, so then you can identify when the market's going to kick back in line with your overall narrative. Right, so there's a lot of benefits to that topic, and again, I touched on that on Sunday, and then I also have a video specifically catering to that if you're interested in watching that. All right, so we could see how the euro has already fulfilled, right? It came off the high, and now we've definitely we definitely dug into the fair value gap here. So I want to see this hold, obviously. We also have this up wick here. That's also a discount array, right? Or a discount point of interest for us to watch as dynamic support. We're also tapping back inside of a new week opening gap here. All right, so we'll see what that's going to do. I believe it's going to probably continue to hold. As you can see, I'm assuming that until something changes overall, our narrative is going to be continued buy side, and we have relative targets related to that as well. You can see how GBP has been the strength holder behind that. So we'll see if that continues. Again, it's the start of the month or start of the week still, so I wouldn't be surprised, especially since we've been so bullish the last couple of days. I wouldn't be even surprised if it was to use today to then reject a little harder, maybe even have a bearish day before it chooses to want to continue ramping higher. Again, the likelihood of anything significant taking place today is very low because of the holiday. The day before, and day after generally don't do very much. Okay, so I'm repeating this because you got to know when to trade, when not to trade, when to push, when not to push, and that's just another piece to that puzzle, So by the time this year ends, or even 6 months ends, preferably like a whole year though, if you stick around and watch these videos consistently, you'll be able to come up with a pretty solid list of when to trade, when not to trade, based on different factors. You know what I mean? So maybe I'll, at the end of the year, make a PDF about that as well. We'll see. But yeah, right? So those are my thoughts on this market, or these two markets. If you go down to the 1 hour, we could dissect it a little further, right? This is a daily fair value gap that I just mentioned. All right, so we want to see what the behavior is going to be from here. Okay, we have run on stops, right? So this is Friday's low, right? We have Friday's low has been purged. So that's the most recent sell side liquidity, okay? So from the last week. So price purged that, so now these people are triggered in. So if it was to want to rally, and what I have mentioned comes to fruition, right? That being price now decides to run higher. We also have SMT here with the fair value gap in the GBP and the euro. So that's a form of bullish SMT because one correlated asset hit a particular level that both of them have while one didn't. Okay, so that may be significant, especially if we get a shift in market structure above this high here based off this 1 hour time frame. And the fact that we're framing these ideas from the higher time frame, it puts us in more of a position to catch larger runs and puts us in a more meaningful analysis process, right? Or analysis, more important analysis step versus just looking at the 5 minute, 1 minute automatically. You know, this allows for us to then navigate to the lower time frame when the time comes, which today I'm going to consider possibly looking for something to take place during a macro. The first one is going to be the 50 minute of this hour, right? So 6:50 or 9:50 for those in the East Coast. So we'll see what happens. But if this is going to go higher, right? I'd like to see this SMT hold. It seems as though that's the case, right? Look at the volume in this candle here on the 1 hour. So now we just created a shift almost in market structure. There's an order block. Okay, so we're going to see we also have a well, not an inversion, but a fair value gap here from Friday in the GBP. Plus, again, we have that SMT. So we'll see if this is going to sustain or if it wants to maybe give one more dig lower. But overall, our narrative and the thing that we're getting behind is bullish indices, bullish currencies, and bearish DXY, right? And of course, we're going to continue to monitor Power 3 because if we're bullish, price could want to dig a little deeper, right? Tuesday and Wednesday generally have an opportunity to present the high or low of the week. So we'll see and monitor which day that's going to take place. And then see if we can open up towards the end of the week. But again, I wouldn't be surprised if it failed to break this high and give us that sustained move just to try to hold price a little further, while the indices possibly look to then retrace a little bit. You know, I wouldn't be surprised if that takes place too. But we'll see because right now things are kind of cracked, right? If we take a glance at the Nasdaq real quick, we could see that, you know, yeah, like I said, there could be a likelihood for this to want to retrace real fast because we still have this fair value gap down here to meet. So we'll see how everything in sequence operates as price looks to set up whatever it's going to do off the heels of this holiday. Again, we've been really bullish in the Nasdaq and the other indices, so I wouldn't be surprised if there is a retracement to set up our run higher eventually. You know, maybe that happens today, maybe it doesn't. But if we break this low here and we can stay below this new week opening gap, I believe there's the holiday gap is here somewhere. Just got to find it. Yeah, so the holiday gap is right here inside of the new week opening gap, so it's not really that significant. So yeah, we'll take a look at this in a second. News is about to or the open's going to come out, and similar to what we were talking about in those other assets, given the characteristics and possible behavior in those previous assets we looked at, it would be very likely and very much interesting if we are going to have a bearish DXY for us to continue to do this, run up higher. Remember, each one of these candles is a daily candle. We're looking at the daily chart. So each high is a daily high. What's above a daily high? Or what's below a daily low? Liquidity. Okay? It's very important. Daily highs and daily lows are very, very significant. Okay? It's very good, continuously repetitive liquidity that you can constantly mine ideas off of and target. Right? So yeah, with that being said, I wouldn't be surprised if it was to try to purge this out, maybe give us one little tap into this fair value gap, but it depends on how heavy this is going to be. If it's going to just dump off and then, you know, run automatically right to this fair value gap, then so be it. That would just then show us that the indices and foreign currencies are going to be very strong. As of right now, though, it seems as though it wants to run up into here, so I'm assuming this will instigate some type of retracement in some capacity for the indices until this fair value gap is met. At least that's what I'm going to assume. So let's jump to, yeah, so it looks like that's in play right now. All right, so if we jump to the 5-minute real quick, we have our target down here. That's that daily fair value gap potentially. Okay, so we have equal highs up here. We have a run on stops here. We have consecutive down candles here. This is turned now into a bearish breaker. And the levels of invalidation to continue to trust this, or validation, for us to trust this particular breaker here, because that's what this is, high, low, higher high, and then it broke the low quickly, aggressively, very fast pace. So this high to that low right here, right, from here, where is my thing? I can't find it. All right, so from that level, the high there that I mentioned, right, to the low of the breaker, that range is classified as a balanced price range. Okay, so if this is gonna hold, if this breaker is gonna remain valid, it's gonna, it's gonna have to continuously show respect and not breach this midpoint. So what are we kind of painting here as well? We see that there's this fair value gap in here inside this breaker. There's a displacement, right? So if it's going to hold, it has to respect the midpoint of this breaker. It should not fill it in. It's not permitted to do so. If it does do so and looks to come all the way back up and fill that in, it's, for one, not as bearish, so it's not as likely that a larger extended to the downside move is going to take place. But if it does respect that, we're also identifying within this little explanation here a scenario where you can anticipate fair value gaps holding or not filling completely entirely, because the lower portion and inside, you know, this particular delivery here, right, it's a balanced price range. What is that? It delivered buy side, sell side efficiently. And then if price was to come back in here, respect the midpoint of this breaker and the midpoint of the balanced price range, because that's what a breaker, I guess, is showing, if you want to call it, if you want to say it that way. Same with order blocks, right? The reason the midpoint of an order block is to be respected is because that order block is forming a balanced price range. So if it's going to be valid, the midpoint's going to hold. That's why when the midpoint of a breaker is violated, generally shows that it's not as strong of an idea. Or, you know, same with the order blocks, right? If a midpoint of that is violated, it's not as, you know, likely that it's going to hold, right? That the reason is because it should act as a balanced price range. So the upper portion of this breaker pattern here and this upper portion of the fair value gap that we have beautifully delivered in here, right? That should hold. If not, we're wrong. And then cut bait, right? If you take a trade, right? No thoughts about it, because that's part of the rules. And that's, you know, these are things that I've discovered through, you know, all these years of identifying breakers and understanding balanced price ranges and all these different concepts and just studying it and seeing it, right? And then, of course, a lot of the stuff that has been taught over the last couple of years, they've also, you know, there's been a lot of gems in there as well, aside from the whole mentorship content and charter level teachings, stuff like that. Okay? So yeah, keep this in mind. Let's observe this. Okay, let's monitor this, because what I just mentioned here is extremely powerful. Maybe it went over some of y'all head, right? But if it did, right, just let's watch this, and then maybe, you know, later rewind this video at this particular time and just study what I mentioned and watch how price delivers here. If it's going to hold and go lower and attack this low here, which I believe is, yeah, it's previous session low from yesterday, AM session, on its way to the daily fair value gap that we have down here, possibly, in the 8-hour, right? So that's where I would like to see it go. But then because of the higher time frame, we're still bullish. So if it gets down here, I'm not thinking just because it drops, oh, I'm bearish now. No, short term, maybe. Remember, in the last call, I talked about the difference between narrative and bias. Narrative generally doesn't change day to day. Bias can be subjective because there's retracements in bullish trends and retracements in bearish trends and consolidation along the way. So narrative stays very much the same until something significant is violated on the higher time frame, while bias can flip-flop back and forth, right? But understanding the higher time frame narrative and what the overall story is from that daily, weekly, monthly chart, it assists you in navigating whatever phase you're in terms of bias on a day-to-day basis. Like, for instance, if it's going to be a bullish week, right, and the narrative is possibly bullish, price dropping creates a manipulation, and us navigating that changes our bias, and it goes against our narrative, the higher time frame narrative, which is bullish, right? But that doesn't mean that we're going to just sell constantly. We're going to wait till it gets to the higher time frame level that may result in price turning back into our favor in regards to the higher time frame narrative, the actual overall narrative, right? So yeah, I hope that makes sense, you guys. So if we go here, okay, if we go down to the time frame over here, we could see, wait, I didn't get the full thing. You can see price hit a fair value gap in here, right? So just thinking from the perspective of what I just mentioned, you know, maybe you got into this trade, right? Trusting what I just mentioned, right at this fair value gap in here on this 2 minute or 1 minute chart, and you put your stop right above the midpoint of the breaker, right? Look how much points was offered just off that idea we just mentioned. The 30 points we talk about has already been taken out. We go into each day looking for the minimums. And if everything that I just mentioned makes sense to you, you're on a right path, right? Because, I mean, you could see, look at how valid what it is that I just talked about has done. Like, look at how valid that's been. Just as a scalper, because we're not looking for home runs right now, right? And this is counter trend to the narrative, right? It's a counter bias to the narrative. And it may very well look to turn around and go higher and maybe break these equal highs up here, which in my opinion are very suspicious. Okay. But for the most part, right, something like this is all you really need. And what I just mentioned, that logic repeats over and over and over and over and over. The rules based on the breaker and order blocks, specifically being basically a balanced price range, being able to trust the fact that the upper portion of a bearish breaker or the lower portion of a bullish breaker or order block should be respected if it's valid, that is repetitive, right? It's very, very, very repetitive. So yeah, I hope this stuff makes sense, you guys. What is my opinion on 2022 mentorship? It is probably the best model you can possibly try to identify and start to learn with if you're brand new or don't have consistency at all. I trade 4 different models. Market maker models, breakers were my first 2. And then, of course, he taught the YouTube model, 2022 model. So I added that. And then I also have always had the institutional order flow entry drill. And all 4 of the models that I use have continuation variations. And I trade on any time frame, seconds, 1 hour, 1 minute, doesn't matter. So you could see that there's so much that's available. And it took me 8 months approximately with each model to be able to incorporate them all at the times that they're required to be applied, or look to be applied at. They all have different rules. I mastered one before I mastered or even considered adding another one. So, me saying that I have 4 models isn't like in any way something to motivate you to go learn 5 different models at once. Learn one at first, then another one. Because if you don't do it that way and you go about your studies trying to identify 500 different things at one time, and you're trying to backtest and, trade, but you're trading off of 5-10 different models, how are you going to get accurate data? Like, you can't do 500 different things and then evaluate your skill set accurately and find what works for you if you're not focused on one model first. One model has continuation variations, like I've mentioned. I mentioned this on my Instagram too, right? One model can give you so many different opportunities in a day, especially if you're comfortable with like the micro time frames. So yeah, just keep that in mind. I mention all the time that I have multiple models, but that's the thing. That's not in any way telling you have to do that. You don't have to do that. You could pick one model and be solid. I'm just a freak show, and I want to know everything, and I do this full time. So from my opinion, if it's reasonable, right, and when it was reasonable, I looked to add more so I can grow my skill set within the trading business that I operate. Okay, and it's served me well. And that doesn't mean I go in looking for every single model I use every single day. I identify some of them overlap. Well, actually, in fact, they all overlap, right? Like in a market maker model, you could find, if you're framing it from a higher time frame, you could find little market maker models as it creates that higher time frame one. And then inside each of the phases of the market maker models across all time frames, there's breakers, YouTube model, institutional order flow entry drill, continuation variations, depending on the circumstances and where price is at, and the different requirements that each model has. That's what allows me to make a decision as far as like which one I should operate. All right. So yeah, I hope that made sense, you guys. But yeah, so this opportunity here, like I mentioned this breaker, right? It is kind of being held. Okay. And, but nonetheless, if you would have taken an entry here based off this breaker, right, and, went to this 2 minute or 1 minute, found a fair value gap and entered that, again, we talk about the minimums, taking down the minimums. If you were trying to hold this for 100 points, disregarding the fact that we're in low probability, high resistance conditions because of the holiday rules, if you didn't have a mindset like that, you're now getting stopped out. Or you probably will get stopped out, because it has a possibility of turning around. But if you were smart and you take this good advice and you target the minimums every day, think about how much easier it is to hit your goals, how much less demanding your trading will be, how much less stress you'll have, because you're not worried about impressing anybody. You're not worried about finishing a challenge in one day, changing your life in one day. You're focused on consistent bangers, okay, base hits consistently, so you can have a reliable income, possibly, right? Disclaimer, not financial advice. But yeah, Kami, definitely focus on, or Cami, I hope I'm saying it right. Definitely focus on one model, brother. There's no reason for you to learn anything else until you feel you have solidified that one model. I'm starting to have a good feeling that price is going to possibly get down into this level. So we'll watch and see if that takes place. I think it will. I believe it will. But if it stays above this new week opening gap and just refuses to go down there, then we'll just continue to keep our eyes on the highs up here, because this is very suspect to me. But again, until that's proven, so far things are supporting the idea that price is going to give us this retracement, and there it goes. Right? So yeah, the last two live calls, I've called 2 trades. Both trades have been profitable before the fact. I've laid out rules. I've laid out my thought process, whether I would or would not have taken the trade, but I'm framing it so you can see the logic. And then when it plays out, you have that experience to add to your knowledge. Okay, that's the main thing. My entries and where I tell you to enter and this and that, none of that really matters if you don't look at how I'm coming to this decision. We talked about the bonds and yields. We talked about the start of the week, the likelihood. We talked about holiday conditions and the rules around that. We talked about, the different things that led to me feeling like price could go lower. We talked about breakers, order blocks, balanced price ranges, all within the last, how long has this call been going on? 40 minutes or so? We covered a ton. And look at that. Look at the move. Another 50 point move, similar to the other one that I gave. The other one I gave on the previous live call from last week, went over 120 points. Right? Now this one, right, in the moment, before the fact, well ahead of time, right, we identified the likelihood that this could take place. We identified what would invalidate this taking place. Did it come back and touch the fair value gap up here like I mentioned? Right? Has it held the way I said we should see it hold? And why it should do that? Right? You should be answering A big fat yes. Okay, and hopefully it's simple enough for you to have understood. Uh, and you see how quick the decision was made. Okay, you saw how quick I was able to identify this. It comes very, very fluidly, eventually with you, and your identification of ideas in the marketplace once you have all these different elements in place. Right? Things get a whole lot clearer than you can ever imagine. And all of it has to do with the things that I share. You know. Okay. Of course, derived from the wonderful teaching. All right, so does everything make sense, you guys, as far as what we've talked about today? And again, if you haven't liked the video, definitely like the video. It's much appreciated. Share with your friends if you think they can get some value. Let me know in the chat if you took this trade. Definitely let me know in the chat if you took this trade, because that was a banger. That was freaking beautiful. Absolutely amazing. How long did it take me to master my mind? Well, I didn't necessarily master my mind per se. Okay, that's not necessarily how I have been able to do what I've been able to do in trading and have the mindset that I have. I set rules around my weaknesses, the things that hurt me over the last 5-6 years at this point, and I've placed rules on myself, and my ability to follow those rules are going to directly correlate with whether I succeed or not. And my why in trading, why I started trading in the first place, is to make it so eventually I'd be able to have time with my kid as much as possible. Be able to not worry about a job if I get fired or any of this type of stuff. So that why, every time I think about breaking my rules, if I think about, doing things outside of what I know allows me to be successful, I remember those things. And I also remember the fact that if I don't have risk management, if I don't follow the rules that I have intentionally placed in my trading, if I don't follow them, I'm asking to fail. So if I want to fail, I'm going to keep breaking my rules. I don't care how I feel. Oh, I want to hurry up. No, none of that matters. Do I want to succeed or not? What do I have to do that? I have to follow my rules. What rules? The ones that I have made to protect me from myself and protect my account and my mental capital. So yeah, it's a lot of it's going to come from you. First of all, if let me see, like if you miss a move, you get stopped out before the big move. Well, you just got to submit to the fact that happens. You're going to get stopped out. You're going to miss a move. And what matters isn't the fact that you missed the move, right? What matters is you trying to figure out how you can build the confidence and set rules around your trading, so then next time you'll be able to be confident. What did you miss? What made you miss the move? Were you fearful? Why were you fearful? Don't you have a risk plan? Like, this is the dialogue like I would have with myself. Like, okay, I missed a move. I'm pissed off, or oh, I feel like I'm not going to catch a move now, or whatever the case may be. Well, if we missed a move, aren't we going to be trading 5-10 years down the line? Well, in my case, forever, right? So one trade doesn't matter. It's a string of trades over years that matters, and your performance within that. Missing one trade today is not going to impact whether you're successful or not in the next couple of years. Right? Missing one trade is not worth getting upset about because of the simple fact that all the things I've laid out in terms of multiple continuation variations for every model, the fact that every model continuously shows up at least 3 or 4 times a day, right? Depending on what time you trade. The market's never going to go away, so there's always going to be something happening, right? So missing a move and getting upset about it is very irrational. I never thought about it that way when I was first starting. I would get pissed off every moment. I see one candle print, and I would think, oh my God, I missed a move. I don't see anything there, but it went down. I thought it was going to go down, so I missed a move. Well, another thing, if you miss a move and your model wasn't there, it just went down and you knew it was going to go down. That's not your trade. You didn't actually miss something because your model wasn't there. Your one way of doing things was not showing. And if you get mad about that, say you saw a breaker form but you don't use the breakers and you use the YouTube model, and now you're mad because you missed the breaker, which you don't trade. Maybe you're mad about that type of situation. That's like you working at a job, getting pissed off at the CEO for getting paid more than you, because for him doing his job and you're doing your job. You get paid what you get paid for your position. He gets paid for what he gets paid for his position. And if you're mad at him, wouldn't that be illogical? Like if you're mad at some other coworker that's doing a different job but gets paid more, right? Wouldn't it be kind of irrational to be mad at someone else for them doing their job and getting paid more than you when you have your job? That's like you getting mad. It's real similar, like to the fact that we get mad over other models showing and delivering while our model didn't show. It's just irrational. It's like it's getting mad at something that really has no relation to anything. It's irrational. Just like missing a move and getting upset in any capacity, it's irrational because there's always going to be more stuff. That stems a lot of times from being impatient. Impatience is something that really needs to be drilled down. Over trading, over leveraging, and being impatient. Those are things that you have to set rules around. You have to submit to the fact that you should be focused on one model. Okay, you should be focused on that model. If it doesn't show up, then you don't have an opportunity. Doesn't matter where the market goes. Doesn't matter what the market does. Okay? And there's always going to be another trade. And the next trade you take, whether you win or lose or miss the trade, it's not going to dictate the success you have in the coming years or throughout your career. So if you think about it from that context, don't you think it's pretty irrational to be upset about missing a move? I mean, it's just the facts. Right? And again, me saying this is one thing, but then you applying it, or us applying it, not just you, like when we apply these things versus just hearing them when we haven't applied them before, it's uncomfortable, but just think about it. Just think deeply about it. And remember, if you're young also, brother, you're super young. Even if it takes you 5 or 10 years to master this still, which it probably won't, because you seem really dedicated. But even if it did take that long, you'd probably be maybe 30 years old, if that. I mean, I'm 30 right now. Okay, like it's not old. At least I don't feel old. In some people's eyes, maybe I am. But there's so much life to live, and when we're young, we're so in a rush. And in this industry, you don't want to have that make you a victim. You got to enjoy the process. The process is the goal. Because once you're profitable, once you do hit full time, I mean, that's going to be great. But you're going to look back on the process and be like, man, that was one hell of a ride. So enjoy every moment, dude. Don't be too stressed out. Don't be mad about missing an opportunity. Because again, it'll always come back around. They're like buses. Okay? They always come around. There's multiple opportunities for multiple models that we look to trade. There's always going to be a day of the week. For the most part, there's probably always going to be the markets, hopefully. Right? Hopefully we continue to have the markets. I believe we will. There's too many trillions flooding in and out of this market for them to take it away. But yeah, don't let impatience, don't let being in a rush or any of these types of things get in the way. Don't let your ambition cloud the reality and what it truly means to be a trader. Being a trader means you're going to have to accept taking wins and losses. Okay? It's going to take place. You're going to lose, you're going to win. Sometimes you're going to be in a big fat losing streak. And some days, some weeks, you're going to be in a massive winning streak. Knowing how to manage those highs and lows are very important. So again, just enjoy the process. Don't be too hard on yourself. Okay, that's the worst thing all of us have done. We're always at the start very hard on ourselves. At least I was. I was vicious to myself, dude, and it was depressing. And when I first started trading, it was a very hard time in my life. You know, it was, yeah, it was not a fun experience at first. But you get through it, and then you look back and you see that anything you've had to go through along the way, whether it's in your learning or in your personal life, anything you overcome, it definitely gets turned into an asset. Because then the market can't do shit to you, right? Like, what's a loss if you were homeless, right? Like what is the impact of losing a trade if you were homeless, if you didn't have anything to eat, and you had no option, or just compare taking a loss to anything that was hard. Maybe you lost a family member. Compare this to you breaking through losing a family member and being able to deal with that, and then became better after something like that. Think about it. Like, what value does a loss really have? What kind of damage can it really do to you if you've overcame so many hard things in your life? It's just altering the way that you look and see things. And that's a big element to you. To answer your question, that's a big way to overcome yourself and master your mind. Just compare things. Like, be rational about it. Like, okay, me losing a trade here, is that worse than some of the most insane stuff that I've had to overcome as a human being throughout my life? Because it's fun that we have an opportunity. It's actually a positive thing that we get to get in the market and take losses, because that means that we have the opportunity to participate in the market, which a lot of the population on the planet doesn't even have that opportunity. So we got to be thrilled that we're allowed to take a trade or take a loss. Again, it's altering your thinking. I've had to do this thought experiment type thing for many different things that I've endured in trading, from breaking my rules, impatience, low confidence, trying to get through the process, feeling like I'll never be able to do this. All those different things, I've had to readjust my thinking and sit by myself and really think about it rationally. And I didn't have anyone besides ICT to tell me this type of stuff. And he was not in a one-on-one capacity. Okay. He's inaccessible unless it's on a recorded video, which you can't really ask questions on. So at first I was literally losing my mind, from being homeless to, having a insane relationship, to a failed relationship, then custody battles with my child's mom, who's a psychopath. And, while learning to trade, while blowing my accounts, and then COVID hits. Okay. And it's just like, I had to overcome all that just to look back and, finally see that, popping out the other end was something beautiful. And so again, losing will never be able to hurt me, and I will not be upset about taking a loss, because I know it doesn't matter, and I've overcome worse. And that's going to be the same thing for you. When you look back and you take this into consideration, you'll see that taking a loss is not as dramatic as we make it out to be, because 5-10 trades later, we're not even going to remember we took a loss. Okay, unless we overtrade and blow our account, then we're going to probably remember for months, maybe forever. But if you follow the rules, keep yourself limited, think about things in a more long-term perspective. Instead of thinking about things today, think about things in a week, in a month, 2 months, 6 months. You don't have to think 10 years, 5 years down the line. At least think further than just today, because today's trade doesn't matter. The only way it's going to matter is if you take a trade and you overtrade and you look to blow your account. That's the only way that this day will be overly impactful in a negative capacity. It'll feel great to win a trade. You could see here there was one offered. If we miss it, oh well. The thing that matters is the fact that we understood the process of what got us here. because now we can go into tomorrow and be confident that we can then apply the same thing and find another opportunity because this repeats. And it's the same with the YouTube model. So again, that's just another asset in terms of thought process that can start cutting away at the psychological effect of missing a trade, losing a trade, so on and so forth. It repeats faithfully. And you hop on these live calls, or those of you that are in my private community, I mean, you see it continuously. Like at this point, it's been 3 years of just nonstop, continuous, like over and over and over, same thing, different day. Look, and then there was another opportunity in here using the new week opening gap. Continuation, right? It did blow this out, right? But now, again, where are we headed? We've already outlined the higher time frame. We said that the daily fair value gap is probably going to be what gets targeted, so price can use that as an area to basically launch price from, right? But until that gets down into there, we may see price have some of a bearish tendency. For either it's going to be the manipulation for price to go down and go higher for this week, or this whole entire week could end up being that run into the fair value gap. This could be the weekly draw on liquidity. That could very well be the case. And there's been 2 opportunities identified and seen real time here, right? If that's what we favor, which for the most part, that's pretty much what we've been favoring, is trying to see if price, trying to see if price can continuously attack that sell side. It did hit it hit the sell side that I wanted to see, right? If we take a look right over here, right, we see another low here that's been purged. We see another low here that's almost been purged, but what's below that? We got a fair value gap in here, so it wouldn't be unreasonable if we wanted to target that, right? But until price ends up blasting higher here, really showing that it wants to run higher, we'll favor this continuing to go short. Okay, now we got up candles here too. This up candle, that's a bearish order block. You could see price came directly to it, to the tick almost, plus a fair value gap. Use that, rejected away. We got consecutive up candles here. So if we move up in time frames, that's probably, a bearish order block. Okay, so here's another bearish order block. We got sell side liquidity here. Find it. There it is. All right, so sell side's been attacked. We also now have this bearish order block. Right, so this bearish order block, like I mentioned earlier, right, the midpoint should get respected. If it doesn't, then price is gonna, at least for the moment, look to start targeting some buy side. Right, we're in a silver bullet time window, so this silver bullet, at least for now, has shown that it is looking to favor shorts. And a target, a reasonable possible target, from what we see here in the chart, I mean, this is a pretty obvious fair value gap in here that it's pretty likely to be attacked, especially if this order block here holds and we stay below the new week opening gap. If those things take place, again, that's just continuously supporting the idea that we're probably going to look to target this daily fair value gap. Why is that reasonable? Because we've been really bullish on the indices. Narrative-wise, higher time frame is clearly still in a higher time frame bullish narrative. Bias, though, is looking like it is retracing bearish inside of that overall bullish trend that we've been inside of recently. All right, so I hope that makes sense, you guys. Very important. We talked about a lot of important stuff today. Today and on Sunday have been jam-packed with a lot of just insane stuff, and hopefully, I know that probably a good amount of it is going over you guys' head. Hopefully not. Hopefully you guys can see it, but eventually, because I talk about a lot of this stuff on a regular basis, but man, if you apply these things that we talk about, it's incredible. Yeah, here's the order block here. Okay, so we got 7 minute. We got 10 minutes or 15 minute? No, it's a 10 minute. Okay, so I'm probably going to actually use the 10-minute locations. So yeah, we're gonna identify that real quick. Let's go down to the seconds. Okay, so if this is gonna hold, we should see this little area here should hold and be able to deliver price to the downside here. If not, right, if we get an impulse higher, if we go and check out what some of the other indices are doing, let's kind of take these off real quick. So, okay, so we have an SMT at the highs here. This has pretty much kind of assisted us in dropping. You can see that the Dow, we're in a wedge. And if you go from this high extreme to this low extreme, we're right at equilibrium still. But it seems as though, we're trying to dig into some form of a retracement, which, since things have been so aggressive to the buy side, not the Dow, but the S&P and the Nasdaq, they've been really running to the buy side, and there's a fair value gap right down below us. Price goes from liquidity, from the external liquidity to internal liquidity. Okay, so if we've taken a higher time frame high, it's likely to retrace if the bullishness is going to continue overall, narrative-wise. Before it does that, if we take out external range liquidity, we're going to seek internal range liquidity for the most part. Right? Price only does one of three things whenever it's delivering to a particular point of interest in terms of narrative and bias. It's going to attack some form of a higher low, high or a low. Okay, I have a list of liquidity that I mentioned, labeling each high and low that on a day-to-day basis are pretty important. It's going to create, rebalance, or retrade to an imbalance or one of the other PD arrays, right? For the most part, imbalances. Or it's going to consolidate. So once you can identify which one of the three we're involved in, like in this case, we've been bullish, so it attacked a high. Now, it wouldn't be unreasonable for them to want to go oppose that and then reach into some form of a discount array before it looks to want to run higher, right? In this case, it just makes logical sense that if price is going to continue maybe to attack these highs up here, running to this fair value gap here to then set up a run higher just sounds logical, And then if this was to be lost and price violates that, what does that mean? That means that, price is now possibly going to seek the other side. And so then we adjust and continue to do the same things. Of course, along with all the other very detailed bias and narrative descriptions, which I'm not going to get into today. I'll save that stuff for Sundays because I want to stay focused on entry and opportunities. Right? So yeah, price has been very aggressive, right? So it delivered the two opportunities that I pointed out. I pointed out this first one. We were talking about some other stuff, but all in all, the overall bias today has been trying to favor possible shorts until proven otherwise, to possibly set up further buys. Target overall, in my opinion, is this daily fair value gap down here. Give me 1 second. Sorry, y'all. Freaking dog was losing his mind. Yeah, my dog was freaking losing his goddamn mind. All right. But yeah, so like I mentioned, it's reasonable for price to want to reach to this fair value gap. And we're just gonna continue with this downside favor until proven otherwise. Now, if we break this high here, like say, price maybe hits this fair value gap, then starts to really ramp higher. Remember, the narrative on a higher time frame for us right now at this current moment is looking to favor or identify spots where price, may want to turn around and continue going higher, because we're also keeping in mind that the yields may look to go lower, right? We're still monitoring whether these levels are going to act as resistance and push it lower, which would drag DXY lower. And then we'll see, we're trying to observe how these levels are going to behave and whether they're going to support price and look to push them higher. Again, that would support, if all that takes place, that support currencies going higher, which there may even be an opportunity presenting itself in here for GBP to attack the buy side here. You do what you will with that information. Okay, I got an order block here, inversion for or reclaimed fair value gap in here, and an overall bullish narrative. We'll see if DXY cannot come back to this fair value gap. That's very telling. That's showing that we are extremely bearish, and we're most likely going to reach down into here, very likely. But we'll see, because right now, thus far, we are in a little retracement after a big large range, a couple large ranges from Thursday and Friday. So large ranges lead to small ranges, but then small ranges lead to large ranges. Okay, so very important thing that ICT has mentioned before, which he ended up getting. He got that information or that statement from Larry Williams when he was learning from him a long time ago, and it's very much effective, very, very accurate. And so yeah. So yeah, do you guys have any questions? If you guys got questions, I would really recommend you ask them. Today has been very, very eventful in terms of learning. And of course, we slipped in an opportunity, a possibility to take a sell or short, given all the things we've been talking about. Yeah, do you guys have any questions? We're in the silver bullet, so we'll see if something can be presented. We may end up seeing price turn around here. So we'll continue to monitor if there's any evidence of that. Otherwise, we still have our downside objective, which is the daily fair value gap. We got Friday's low here too. I wouldn't be surprised if Friday's low here on the S&P gets targeted, because that's also inside the 8-hour bullish fair value gap here. And Friday's low for the Nasdaq is also over here. So that's definitely something to keep on your radar. But, we also have this fair value gap here. If we zoom out a little bit. It's kind of like the upper portion of the fair value gap. We do have this one right here. That's a better one. It's a better one to identify. This may be used as an inversion. If price can get back above that, then that would be when I start to decide, okay, it's not going to go much lower. So we'll see if that takes place. Oh, shit. What happened? Sorry, 1 second. Yeah, watch this right here. Let's see what takes place right here. This may, in fact, turn around if I glance at DXY. If DXY, again, starts to just dump lower, we'll definitely consider this as a possibility to enter. This would then, if this high was to break, this high would then turn into a breaker bullish. Alright, so again, if you guys got any questions, please let me know. I'd be happy to answer any of your concerns. Is there anything in particular also, guys, that was like an aha moment as far as what we've discussed so far? If there is, definitely let me know. I want to see what sticks the most with you guys. So yeah, again, if this high was to break, similar to what we did here with this breaker down here, or the breaker up there, we would then look to do a very similar thing, right? And we would take this lower portion of the breaker, okay, and then we would grab this. Again, this doesn't take place to the buy side unless we take this high out. So right now, there's no interest in buys right now. This is just mapping out the scenario if we were to get price to push up here and at the same time have DXY decline as a result as well. We also might have a breaker in here as well, right? So just off this one model, the breaker, we had a bearish breaker here delivered, right? We may have another bearish breaker. Well, this is technically an order block here, you know, consecutive up candles, 10-minute. But if it was to break this high here, that could be a bullish breaker, right? If everything aligns with the adjustment in terms of intermarket relationships. Again, I just want to make sure you're aware. We are favoring shorts until this was to take place. So I'm just mapping out different scenarios, different thought processes that go on in my head, so you can kind of see how I navigate from one to the other, when I do so, how I validate while I'm in the trade, because it's more important than me telling you, hey, enter here, which I'll never do. Okay, I'm not going to tell you to do anything. It's all up to you. It's illegal for me to say, yeah, guys, come in, jump in, and you're going to be rich. Like, it's illegal. So, idiots that do that on social media are pretty ridiculous. They're compensating for things as well if they try to be too image-driven for the most part. At least that's my opinion, but whatever. But yeah, so this, if it was to break this high, it may be a bullish breaker if other things align. This right here, the low, high, lower low, this may be a bearish breaker inside this 10-minute bearish order block with the framework that price may get down to this daily fair value gap below us, which is the thing that I want to see take place. I want to see DXY still drive a little bit higher. If we can get that, that's what I prefer. I want to see us fill in this fair value gap. If it doesn't, and it uses this fair value gap, then that's just showing us that we're really weak. We're also inside of an overlapping weekly bearish order block. You see that? So there's multiple overlapping PD arrays. When you have that higher time frame overlapping effect in terms of PD arrays, that's a very, very good sign when it comes to identifying validity to a particular direction or a reaction off of a particular level. So yeah, watch this. This could be a potential opportunity too. Invalidation level for this would be if it breaks above this candle here, because this is the candle that would form this continuation variation of the bearish breaker inside this overall move. It's very much delivered already, right? We've had a very large move. So again, we're outside of a premium based on, this range here, right? Because buy side was taken here. We had a displacement lower. So, equilibrium or premium is up here, right? So it's a little more risky, plus it's a holiday, but nonetheless, again, this is a possible opportunity identifying the continuation variation of a bearish breaker. Okay, this would be the bullish breaker if it breaks the high. So let's actually map out the thing I'm talking about here. Okay. The invalidation would be the midpoint over here. And then obviously busting through this 10-minute order block, we have a middle point of that as well. So if it busts through this breaker, busts through the midpoint of the 10-minute, did I say 10 hour? 10-minute order block, and then breaking above this high, that's 3 PD arrays in reference to this current time frame that we're identifying the opportunity and monitoring the structure on. Right? Not, of course, not disregarding the higher time frame view that we've been studying, right, and paying attention to. Right? So you can see all these different things that we have to keep track of as a trader. This is why it is difficult for so many people. But again, I hope I've been able to explain things in not a very complex way, very simplistic way. But yeah, if this was something that you did elect to engage in, you'd have to remember it's a holiday. The risks are high. We've already delivered fairly large. We do have targets, and there is a decent range from this to the target. Whether it's from this to this target, which is the fair value gap I pointed out earlier, or if it's from here to there. It's a pretty decent target to attack minimums. All right, so this is what we're going to continue to favor. And again, invalidation for me would be, breaking through this breaker. If it was to bust through this and get up into this level up here, I'm already done. I'm already out of the trade. I won't let it come all the way up to there if I was to enter there. It's just not something I would do. Doesn't mean, you follow me exactly, right? It could very well work out. But I have particular rules that I will not violate just to, show on social media. Doesn't work that way. All right? Doesn't mean you have to operate the way that I'm explaining right here in terms of not taking this. Because this, technically, aside from the fact that price is very, it's already displaced a decent amount, technically, if we are going to get down to there, this was going to be when it does it. Preferably, I would have liked to see this happen in a macro. It's not in a macro right now. So, you do what you will with that information. We also can see a fair value gap in here. We have a fair value gap in here, right? Kind of in line with the 10-minute order block body, the low portion of the body, right? It came right to it. This looks pretty interesting, right? Look at the 10-minute in conjunction with all those lower time frame observations and considerations we mentioned, right? Again, since it has delivered aggressively, if price was to run up here, right, it'd have to stay below this new week opening gap for me to continue to trust that we are going to have a continued retracement. If it was to get outside of this new week opening gap, I'm pretty confident that these equal highs would then be what I would be targeting. Right? I'd prefer, if something like that is to take place, I would definitely like to see this fair value gap tapped, because that would be a lot more like something I would want to see if price was if price was to want to retrace, right? But yeah. So yeah, this like I've been mentioning, I'm gonna mention it again, right? This pattern here is a breaker pattern. Okay, low, high, lower, low. Okay, so breaker pattern was up here, right? I think the other breaker was on a 5-minute. Okay, so the 5-minute offered a bearish breaker, which delivered from a fair value gap with the framework that it was going to target the lows. This one has a 10-minute order block. We're in a bearish movement right now. It's counter trend to the higher time frame narrative. Again, bias changes day to day because of retracements and consolidation. But then we drop down to this 1 minute and we can see how, okay, there's another breaker possibly. And if this is to hold, right, it's going to deliver it to one of our targets down below. But the reason this is important and why I'm mentioning it again is because, again, like I said before, continuation variations take place all the time. And if this one was to be violated, there could be a reasonable framework for price to want to retrace up into these levels and possibly create a bullish breaker. If this breaker here gets violated, it can also turn into an inversion pattern as well. Pretty much all the PD arrays, at least from what I've seen, if you look for them to deliver one side, but it gets violated and turns the other way, many times it's going to now be inverted. ICT mentioned that one time in 2023, and I guarantee you, majority of people did not catch that. He mentioned it one time in one video, and I've not heard him say it since. So he does that type of stuff. It can be kind of irritating because people miss a lot of stuff because of it. But hey, guess it pays to be diligent, right? So yeah, let's continue to see if my decision to not engage because of how extended it is, let's see if that either allows me to have made the right decision or if it results in me missing an opportunity. Like I said earlier, either way, it doesn't matter. All the things that we've been talking about so far is what's important. Again, there is a likelihood that this is a continuation of the breaker, supporting the idea that multiple opportunities show up across different time frames, and all you need is one model. Right? And if this was to be violated, right, say you took a loss here and it, wanted to continue to run higher, maybe it breaks outside of this. Okay, this whole opportunity here, if that was to take place, I would then start to consider this as a possible market maker buy model, back in line with our higher time frame narrative. Because we understand the higher time frame narrative and that it doesn't change day to day, that understanding would allow us to make that adjustment confidently. That's how it's part of the reason why I'm confident when I do make adjustments. Bottom line, we're going to talk about this now, right? So if you would have taken this opportunity, there's your minimums, right? So even if it was to turn around here, minimum was offered there. Maybe you wanted to use this 10-minute order block that I mentioned. Maybe you wanted to use that. Maybe that you're that type of trader. There's another opportunity there. Maybe you held from over here when I first mentioned the fact that it's probably going to go lower. Right? That's a massive, huge move. That's over 100 points already. Yeah, 127 points. 127. Right, so like I said, we'll see what happens in here. But this right here just proves my point in terms of continuation variations. Right? I laid out the risks of entering an opportunity that's already taken off like this. But again, whether you take on risk or enter a trade is up to you. You take the knowledge, you make your own decisions as a trader. I missed this opportunity, right? Because I decided not to take a trade based on my rules, right? It's overextended. I understand that it's down here. If it was to want to drop, right, and it wasn't the day after a holiday, which is high risk, lower probability, I probably would have felt a little more inclined to take that risk, right? But I understand conditions. I have rules around certain conditions, so I personally chose to sit out. But the explanation and all the different things I've been talking about, I really hope you guys pay attention to it. Because, I mean, right in front of your face, it's showing validity. Every time I get on a live stream or do some type of call live in front of people, for the most part, I'm not perfect, but for the most part, things play out exactly the way we want it to. Right? And I'm not over here flashing lifestyle. Bunch of shit that has nothing to do with the skill set. So no distractions. No distractions. Yeah, pretty beautiful. I'm going to clone that as well. Stop would have been 20 to 30. Again, remember what I said about the breaker up here? How if this breaker was going to be valid, the upper portion should have been respected, which it beautifully did. Same thing happens here as well. Right? The breaker candle that we outlined, upper portion of it, look at it. Stop could have been right above that, 17 points. Or depending on where you chose to participate. Would not have been breached at all. Right? So yeah, guys, let me know in the chat what has stood out today in terms of what we've talked about? What did you learn anything from the things we've talked about? Am I rehashing things that you've already known? It's definitely very helpful to have those types of comments so then I can know kind of where everyone's at. I mean, there's multitude of different types of experienced people that come across my channel. Some are brand new, some have been trading for 5, 6, 7. One guy he's been trading for 12 years trying to figure out everything, which is pretty fascinating. Always stick to your rules, okay? All right, what else? What else? Plus, consider the market to have an abundance of opportunities so as to not have FOMO and force trades. Let me ask you this. Yes, obviously that's a good thing you've taken away. But what is the reason behind that? Why is that a valid thing or a valid way to think that the market has an abundance of opportunities, even if you trade one model? Or why is that important? That's the critical part. Let me see if you caught that, brother. That's the main point behind that, because everybody says, oh, there's a lot of opportunities. Everybody says that, but they don't say why. The why is more important than anything else. Everybody says the same crap for the most part, at least on social media. The people that try to pretend they know what the hell they're doing and can't even do what we've done today and just show it live because they're scared. Or, they just aren't there yet. But yeah, what's the why, right, behind the validity of thinking, okay, there's an abundance of opportunities, even if you trade one model? Let's actually go take a look real quick across the board. Yeah, we see Dow's pretty interesting right now. It's giving a pretty strong movement to the buy side. Again, I do have my eyes on Friday's low here. Two-hour, 4-hour. This is a 4-hour fair value gap here on the Nasdaq that we hit. Because we have an edge that is statistically proven to repeat most often than not. So the reason why it's valid to be able to think or make yourself think that there's an abundance of opportunities, even if you have one model, is because there's also continuation variations that present themselves, right? So there was one breaker up here, but if you miss that opportunity and don't think like, oh, there's abundance of opportunities, if I just flip through the time frames, I'll probably be able to see my rules and my model take place again, right? I just have to be able to identify the rules of the model, right? Because in a price leg, there is a lot of times one move that starts the move, the main move, right? The one that really, like this was the main move here that presented this whole entire run. But along the way, if you don't have the mindset that there's a continuation variation of every single model we operate within, that happens at least 2 or 3 times a day in each session. If you don't think that, then you would think, okay, this move took off, I can't enter again. So then your mindset gets shut off and you don't start thinking about opportunities, and it's going to slip by you. You're not going to be able to see it because you've now decided that there's no opportunity. So psychologically, you've now trapped yourself out of even considering that there's going to be another opportunity that's trustworthy to get into. You have to drop your risk, obviously, if you take the continuation portion, because there's always a risk of it turning on you. If, for example, if we enter here and we're so far in a discount and we're looking to sell, I mean, it could easily run back to a premium, then present the opportunity again, back in that same direction. Right? So it's the mindset thinking, okay, if I miss a move, even if I have one model, I don't care. I know the rules of my model. I know what the sequence of events that has to take place is. Okay? And I just have to identify it. And as long as the narrative or bias with what we're engaging at that moment is still intact, for example, like maybe the fair value gap wasn't hit down here, which we talked about. I said I'd like to see it hit that. If it was to deliver here, it's hopefully going to hit that. That's what it did. If there's a framework still available and point of interest available in the direction you're trading within, again, even if you miss the first move, if there's still a higher time frame level that's ready to be attacked, you have to consider that there's an abundance of opportunities, and I just have to be present enough to identify my rules kicking back in line. The sequence of events that presents my model, I just have to make sure I can see that, and then I can enter again. So I don't have to think, oh, I lost a trade or I missed the trade because I didn't take the main move. Right? This really combats and pretty much silences any FOMO. Because what's the reason? And then thinking, of course, in a set of trades, so if you take a loss or whatever, you're not going to be worried about it because who cares about what happens in the next trade? What happens by the end of the week? That's what matters. And FOMO gets totally obliterated by thinking the way that we've explained today, right? Thinking that, okay, there's an abundance of opportunities and I just have to be able to find my model presenting itself again in the context of wherever price is drawing to, right? And as long as a higher time frame level that's logical to be attacked has not been achieved yet, in this case, fair value gap here or the daily fair value gap, or maybe a 1 hour or whatever, as long as that's still available, if your model shows again and it still makes sense to continue to trade in that direction, you don't need to have a fear of missing out. You don't need to think, oh, I missed the move and I'm not going to find another one. Because there's always going to be another move, even if you have one model. And again, if it doesn't present itself, this next trade or today or tomorrow, doesn't matter. What happens after a string of days, months, years, right? And a string of trades, not just the next trade. Who cares? If you win the trade today, that's not going to change your life. That's not going to pass your funded account unless you're over leveraging or over trading. And if you do those things, long term, you're going to get bit really badly. When you least expect it, when it is the worst time for it to happen. So it's best to just operate with the discipline that I try to showcase. And within the rules, you paint out for yourself to protect yourself from things like that. Right? Because without rules, without limits, without over leveraging and over trading, or like if you over leverage and over trade, there's no success. You may get short term, but if you're trying to do this full time and have a consistent, reliable income, it doesn't come from doing things like that. Professionals don't do that. And there's some that do. But again, you have to think they have billions of dollars and their risk is managed. They're probably risking half of 0.5%, half of a quarter of a percent with billions of dollars. So it's still thousands and thousands of dollars. So they don't care, right? Warren Buffett makes 15 to 22% a year. A year. Okay? He's like one of the biggest traders in the world. Yet there's people that are new to this industry that think, oh, if I don't make 20% in a month, in a week, in a day, I'm not going to be able to trade and I'm not good. And that's what I'm aiming at. And I have to succeed by hitting that or I'm not successful at all. If the biggest people in the world don't think that way, what makes us feel like we should think that way? Obviously, given the stuff that we do with this particular way of doing things in relation to ICT concepts, obviously there's a ability for us to get a lot more or have a little bit more opportunity than maybe the average retail trader. But that doesn't mean that we don't celebrate or look to achieve at least the minimums, 20 to 30 in the Nasdaq, 5 to 10 in the SP. That changes people's lives. Okay, it's harder to see that. It's harder to see the truth of the matter when we have a small account and we're making 20 here, 20 there, 30 here, 40 there in terms of monetary value. But you just got to think, eventually that $20 to $30, if you can consistently make that, first of all, that'll grow your account slowly but surely. But once you get enough money, whether it's in a funded account, whether that's in a personal funded account, that $30 to $40 turns into $3,000, $300, or $30,000, right? It just matters how much you have to work with, obviously. But if you have the skill set, it doesn't matter. People will throw money at you to manage their money if you can prove the skill set. If you can prove it and you have like a rich family member or you have some friends and you could pull them aside and show it to them like, hey, this is what I'm doing, and I guarantee you, I'm not going to be perfect. I'm going to take losses, but I guarantee you I've proven profitability over the last, however many years, and I just want to show you this. And if you invest in me, I can get you some money too. There's ways to do things. Of course, nothing is guaranteed, obviously. It's not financial advice. But again, like I said earlier, you need to change the way you see things, the way you think, how you view this opportunity. It's much bigger than what we think it is when we're just starting out and getting blinded by the small $20, $30 gains. And this is a mindset that most people don't have. They don't even allow themselves to get to this type of mindset because, they're blinded and distracted by other things, whether it's lifestyle bullshit or, all this other nonsense, unrealistic expectations, people that don't know what the hell they're doing, going viral on social media, kind of tainting the way people think and putting the smaller traders in a really bad position mentally. Most people also don't think this way because they're not there yet, but they claim they are, but they're not. If you really look into it, you can figure out who really knows what they're doing, with large followings and stuff like that. Most of the best traders in the world don't even have social media because they don't have anyone to impress, and they don't need Joe Schmo over here that keeps blowing his account every week, telling him that what he's doing isn't good enough because, first of all, it's none of these people's business what you do. And if they can't consistently trade, their opinion, it doesn't matter anyway. They don't know what the hell they're doing. They don't know what they don't know. But those of you that watch people that clearly prove it, like, for example, Jade Cap, right? He's one of the only ones I respect aside from ICT. And there's a couple other good traders on in the ICT camp that prove themselves live. But you go look and see how they talk, what they do. They're not like all these other people that claim they know but don't show anything. You can see the different ways they talk, the way they behave, the way they carry themselves. You could see it. But if you're a new trader and you haven't spent a lot of time in the industry, it's very easy to get fooled by these idiots. Okay, that look nice, that rent their cars, that do all this image stuff, that try to blow up on social media. To each his own, right? Do what you got to do. But again, when this has to do with you making money or losing money, you better be very diligent with who you're watching. Because most people have no idea what the hell they're doing. And they can't even do what we did today. And I didn't have to show you an entry. Like my money, how much I make or didn't make. It doesn't, you can't spend my money anyway. But the logic here, right? We see the opportunities. Everything that brings you to the chance of understanding where an entry would be, right? That's what's important. Because then if I'm not here, you're able to go in there with this logic and knowledge and use it on your own. Pass it to your kids. Help your friends learn how to be financially literate and understand this level of financial literacy and master this skill set and change your life, change their life. None of that happens if I make money and you see it. It's just a distraction. It's good for motivation and, stuff like that, right? But again, none of that matters. What matters is, can I get on the chart when you're sitting here watching me and call out opportunities? Can I frame out the logic? Is it repeatable? And can you go in and apply it after you've watched or spent some time with me, listening to some of the things we talk about? That's the value. That's what people should be focused on. But, it's very easy to fall into the dream world of false expectations that people use just to sell things and market to people. And it does you no favors. And most of us, we don't know when we first start. We don't know that that's detrimental to us. And if you're looking up someone that's making $50,000, $60,000 a trade supposedly, and you're over here making only $20 to $30, but you're starting to be consistent, looking at other people's results like that, comparison is the thief of joy. And everyone's at a different level in their journey. So if you're looking up to people, that's one thing. To get motivation, that's one thing. But if you're looking up to someone and you feel less than because you're not where someone else is, when we have no idea where these people are at. We have no idea what they came from, how much they went through, if they are actually doing it properly. We have no idea how much work it took until we get there ourselves. Then we understand. But it can be very detrimental to a person's development if they're sitting here so obsessed with what's the monetary value, how rich is this guy? Like, is that going to help you trade? Absolutely not. And you got to be very aware of what you allow into your sphere of influence. That's why I don't watch a bunch of people. I literally have watched ICT only to learn, and 2 or 3 other people in the charter community that have been a serious blessing to me. That's it. No other ways of doing things, because I already know, based on the results I've seen other people have when I first started this and moved away from normal retail logic, that this is where I want to be. I know the why. Nobody can tell you the why something happens. Why is this supposed to happen? And is that why repeatable over and over and over? So then I can go in confidently and operate. Is there a way that I can identify when something's not going to work so I don't have to sit here and think, oh, what if? All those things, thankfully, are offered when you learn ICT concepts. That's just the facts, whether people want to hate ICT or not. Unfortunately, most people that hate ICT are, they never really sat down and put the work in at all. They just hear what Joe Schmo says, who has a bunch of followers, and his probably jealousy of ICT, going on stupid rants, hating on him. And it never allows people to do their own due diligence. And unfortunately, they miss their opportunity or waste all this time doing some other crap. And then they hurt themselves when it could have been avoided. Yeah, it's very important who you let into your sphere of influence. And I'm very grateful that you guys have allowed me into your sphere of influence. And I will never take that for granted. I'll never steer you the wrong way. I'll never say a bunch of crap. Okay. I'll be real when it's required. I'll say when I'm wrong. I'll be honest about it. I'm already honest that I'm not perfect. I lose. Time to time, things are difficult, but that's just the life of a trader. ICT mentions it too. And if he can be honest about it, what gives us authority to not be honest about it? What makes us think that we shouldn't be? If the main creator of the concepts we're studying is being honest, the industry needs more honesty because it's a wonderful industry. It's better than any other industry, at least if I have anything to say about it. But it requires a lot out of us. And, finding your tribe, your group of people that, maybe do the same thing you do, that understand what's happening, right? That understand the ups and downs, that are honest, that prove it so you don't have to second guess what you're learning and whether you're wasting time. I mean, it's invaluable. And that's the main reason I started showing things online, because I know how hard it was when I had nobody to turn to. So most people just want ICT to get straight to the point. And and most of the time when he's not getting straight to the point, I mean, there's an argument for that, right? That he does kind of walk in circles at times. And he said multiple times over the last year that he does it on purpose because he doesn't want people that don't really want to learn trying to learn this stuff, because they're not going to survive in any trading if they can't sit there and put in the work that's required. It's a lot of work. It takes a lot out of you. Lots of sacrifice. Some people have to change their jobs, take a pay cut just to allow for the time adjustment so they can participate. Some people make massive sacrifices to make this happen. And if they're learning stuff from people that have no idea what they're doing, they're lying to them. I mean, it's heartbreaking. Just even thinking about it. It's just like, it's rough. It's so bad. And people that aren't willing to have patience and make the sacrifices, this is just not the industry for them, unfortunately. It's for everybody, but, it's not for everybody, because not everybody is willing to, for one, bet on themselves entirely, make the adjustments, even if it's uncomfortable, to allow the opportunity to participate, and then also face down failure every single other day, potentially, and be able to continuously motivate themselves through the ups and downs. And in the beginning, it's a lot of downs, But if you don't quit, right, that separates you from the 90% of people. 90% of people quit because they lose their money. They don't even pass a year. They can't even get the wisdom or anything that they can't even get remotely close to any of the things that we've talked about, mindset-wise, technically, because they don't even allow the time it takes. And they're probably listening to a bunch of idiots anyway. So their influence, their sphere of influence is just a bunch of BS, negativity and false promises and unrealistic expectations, to the point that, the failure becomes too much because they don't see the light, because they're running off of a false reality. And that's why I'm like super honest about everything. That's why I talk about these things all the time, because being a successful trader is more than just the technicals that are provided. There's so much more to it. And again, if people aren't willing to accept that, fall in love with that, eventually the market will tell you whether this is for you or not. The fact that you guys that have been with me for 2 hours, listening to the things that I say, and you hop on consistently all the time, or maybe some of you guys sit there and are the type of people that like to listen to ICT's spaces all the way through, regardless of his rants and all that. That's a testament to the fact that this is for you. And all you gotta do is just not quit. And eventually keep beating the door enough, it'll break open at some point. Especially with the things that we talk about here. So Make quitting not an option, because it's how it was for me. That's how it will be until I'm not breathing anymore. So yeah, I hope you guys got value from the things that we've talked about so far. Yeah. 95, I appreciate you as always. Always super active, always asking questions. And you were able to get the PDF, right? The weekly daily bias checklist. The whole process worked out. Because man, technical issues yesterday was a pain in the ass, dude. So bad. Oh my god. Yep. All right. Perfect. Perfect. Yeah, the Dow looks like a mess. The Nasdaq and the SP look a whole lot more relevant. Right? They look a whole lot more reasonable. I do like the fact that we gave this drop, basically liquidating all these people. This is Friday's low. I would definitely like to see Friday's low taken before we kick back in. But then again, if we look at what's happening here, right, there's higher low. And the Dow gave us this lower low here. So technically we got S&T there. If you look at the 8 hour, we can see there's a fair value gap here. There's S&T between the fair... I wouldn't say that actually. I do like the fact that there's so many layered equal highs up here. This looks very nice for the S&P. And of course, if that's the case, if we do end up doing that, it's just going to fall in line with all the stuff we've talked about today and since Sunday, in terms of, you know, price looking to possibly go lower to just end up going higher. You know, this holding as support here to push price to the buy side, favoring upside in the foreign currencies and the indices, and then possibly seeing this string of PD arrays here hold price and possibly get the yields to go lower, which as a result would continue to favor this narrative with the DXY looking to favor shorts. And then of course we leave this fair value gap here open. Let me actually go to the daily chart on the... So yeah, there's S&T between the fair value gaps here, like I mentioned, between the currencies. But then there's also SMT with the GBP or the Euro USD and the fair value gap here in the DXY. DXY has failed to hit the fair value gap. Euro has fulfilled and succeeded in hitting the fair value gap, while the GBP has failed as well. So there's SMT between the DXY fair value gap delivery and the Euro fair value gap delivery. So that's a form of SMT. So again, it's favoring the fact that this is going to drop. We also, again, have this overlapping bearish order block on the weekly for the DXY. So that's me supporting shorts, or that's the market, in my opinion, supporting shorts. So I wouldn't be surprised if we eventually see this give a nice little turnaround. We did have a run on stops here. Logical point of interest I mentioned earlier to see a rejection from. So if price can get above this new week opening gap here, this area here, in my opinion, would then turn into a second stage distribution, and then we should have little to no problem seeing price get back above the highs up here, which are also set as equal highs, in conjunction with the S&P that also has equal highs up here on this larger time frame. So you can see we cover a lot of basis in what I just mentioned, and we came to that determination fairly quickly because we did all the back end hard work to get a lot of the pieces of the narrative in alignment with what our assumption is going to be. So yeah, did everything I just mentioned make sense? I mean, you guys may have a couple questions, but overall, for the most part, does it make sense as far as what our sentiment is in the marketplace and why, and all the supporting factors? If those of you that haven't chimed in have any questions or anything, definitely just drop it in the comments. I definitely want to see where everybody's at. Nutty Fuffa is definitely a savage, and I appreciate him always being as active. But I would enjoy seeing some of the other participants let me know how things are going. Because I'm here for you guys, right? I'm here to help y'all. I'm not here to entertain nobody. I'm literally just here to help you guys. I could care less about attention for the most part. I really don't care. I have nobody to impress. I don't care. I don't care about being looked at. I care about helping people. So, yeah. So just let me know if you guys have any questions, concerns, aha moments, anything maybe in the future you'd like me to talk about. I'll definitely take that into consideration. But yeah, everything so far has been running according to plan. This right here, again, this overall delivery, if it can continue doing this and get above this new week opening gap, I'm entirely confident that we will end up blowing these highs out, and then that's where I will look to find one of my particular models performing, and that's when I would potentially look to engage if an opportunity was to arise. Otherwise, I will just continue to monitor because we still have the rest of the week, and I'm not in any rush. Right? Clearly, this was a run on stops, shift in market structure, and a fair value gap in here. So if you trade the YouTube model, that's a particular entry there, right? Inside of a discount with a lot of different factors supporting the idea that price could go higher. And the overall narrative is bullish. DXY is also showing in the moment weakness and an SMT bearish with the Euro USD. So those are all supporting factors as far as price wanting to possibly deliver from this fair value gap here, presenting again the YouTube model to then seek some form of a premium price level in terms of targets. All right, and then of course, if this was something that you engaged or missed, there's an order block here as well. Stop would go below the fair value gap, and you would be targeting the minimums per usual. All right, so there's the opportunity. Maybe you missed it. I saw this a little bit late, but regardless, there's an order block there, right? So that could be something you can consider as well. There's also this fair value gap in here. It's an inversion. So that's also another supporting factor as far as whether this was going to hold or not. So those are extra factors in terms of building trust for this idea. If this was something that you were watching and maybe considered engaging, or whether this was a good opportunity. If you're targeting minimums, right, and you entered at that fair value gap, there's your 20 to 30 points right there as well. Because again, it's a day after a holiday, day before, day after a holiday. Any type of trading, you're aiming for the minimums. You're not aiming for home run 100-point handles or 100-handle moves. We're in a high-risk environment. You know, there's been some clean moves we got ahead of and called out live in the moment. But again, the conditions that we're trading within at any given time, we have to be able to consider the possible risks, the possible negative scenarios, and you have to justify in your own mind whether those are worth pressing against and taking a trade regardless of those being present. It's all personal decisions. Right, but for the most part, we have had a very fruitful day in terms of possible entries that could have been taken. But then overall, the more important factor is us navigating price, the thought process, all the different things we discussed today, from psychology to, you know, different things that validate or invalidate, you know, different opportunities and why they could possibly be fruitful, or, you know, observing some of the risks involved with any particular ideas that we were talking about right? And then of course we talked about continuation variation, and why that's important, and how that can help you basically destroy any feeling of FOMO, thinking of things in a set of trade mindset versus the next trade. Many different things. So yeah, you can see the cracking correlation here between the euro and GBP. But again, there's that SMT at this fair value gap here. So that's kind of, let me see. Can you talk about the midnight open, how it was above before session open and now it has been below? Can we use that for our bias? Yeah, so you're basically referring to Power 3. I did a full boot camp on Power 3, basically dissecting in great detail about all the open prices to consider, the dynamics of Power 3, why it's important, daily, weekly ranges, how that is justified with Power 3, how you can use Power 3 for bias and narrative, on top of obviously all the things that we talk about. I don't think it would do justice to dig into that right now. But when we're going into a day and we feel price is going to drop, before we even consider taking a sell, we want to make sure that we see the price ran up above the open price on the day at 9 o'clock a.m. Pacific Standard, or p.m. Pacific Standard Time, or 12 o'clock Eastern, midnight pretty much. We want to see if we're dropping. We want to see the session at some point from London going into New York present us with that run higher to then go lower, because that's the manipulation of the daily range. And vice versa, right? If we're looking to buy, we want to see price show us going into the New York Open how price wants to manipulate below that, set up some kind of low, and then start pushing away from it if we're anticipating price is going to be bullish. And within that context, if we could see all those parameters taking place and everything stay intact in regards to that and Power 3 dynamics, then obviously that's another layer to the bias and narrative confirmation and how we operate on a day-to-day or week-to-week basis, because it also happens with the weekly open on Sunday. There's a weekly Power 3 because there's a weekly candle. So if we're above for the first start of the week, Sunday, like that's again, that's another thing that I dive really, really deep into in my boot camp for Power 3, the weekly range, daily range, Power 3, open prices, how to use those things to target, basically navigating that through bias and narrative observations. But yeah, you could see that today, right? So far, it's been a down day. Right, the open price is here. This red line, price consolidated through London, rallied up, set equal highs here, drop lower, basically presenting bearish Power 3 up until this point. So again, I mentioned at the beginning of the session too that there is a possibility for the next day or so to present us with a downside move inside that higher time frame buy side delivery on the weekly and monthly chart. Right, there's a possibility for that because there's a fair value gap down here on the daily time frame that is a reasonable possible target for price to want to retrace to if it was going to want to deliver back to the buy side. Right, it's reasonable for, since we've been really bullish, for them to, go against that for a little while. So that would present us in a bullish narrative because clearly price has been going higher overall. So that's what our main objective is, and our normal risk size is put against. But when it turns around and looks like it wants to retrace, right, we can also frame that as well, right, and identify the opposing liquidity that then, once it gets down there, could set up price running back into the intended direction. I kind of talked about this on Sunday as well, in terms of the breakdown of what I possibly wanted to see going into the week. So yeah, there's a lot of details in there as well, basically describing what I just mentioned. So yeah, and then price obviously took out buy side, right? It's been very bullish, so it's only right for them to want to pull back in some capacity. So the runs higher on this daily chart, each bullish candle, you could see it opened, dropped below, set a low, and then ran back above that open price. So that's bullish power 3. And you could see today how it opened up here, ran up, which if we go to the 15-minute chart, you could see that's the high of that candle I just showed. That's all this price delivery, right, from the open, right? Rallied up, set the high, go back to the daily chart, right? So that's this high. And then it got right back down below that open price to retrace, right? It retraced a bit. Then if we go back to the 15-minute time frame, we can see how the details look inside of that daily candle from the lens of power 3. But again, and here's the fair value gap I showed earlier that I wanted to see it tap into a bit more before considering any type of retracement, which obviously it hit that. And that statement I mentioned earlier also has come to fruition, right? If you go back into some of the call, you could see I mentioned that as well. Right? Did that make sense, Eddie? And just to simply answer your question, absolutely, Power 3 is involved in identification of bias and narrative. Because Power 3, the open prices and how price operates around those specific areas, the characteristics it presents within the lens of Power 3, it's very, very useful to build more trust in a particular delivery and price that we're trying to observe. Right, so look, you see this gap here? This is our regular trading hours gap. So we got a midpoint here. But then again, we also have our new week opening gap as well. So if it gets above this new week opening gap, again, we're inside of a higher time frame bullish run. So this drop here, unless it doesn't get above this new week opening gap, right? If it doesn't get above there, we're going to continue to drop, and then our target ends up being the daily fair value gap. But if it gets back above that, again, this turns into a market maker buy model inside that higher time frame narrative. This shows the importance of rooting your ideas and never forgetting what that higher time frame is doing. Rooting in the higher time frame and never forget where you're at on that higher time frame. Because if you're just on this time frame here, you're probably thinking we're in a bearish market now. It's going to trend bearish. And you won't have any consideration to trying to find buys if things present themselves. But if buys were to present themselves, like say we get above this high and just start smashing above this, we're now back in line with our higher time frame overall narrative, which in this case, obviously, we have the highs up here, and then on the S&P, we have those equal highs I mentioned as our possible draw on liquidity overall. It's not unreasonable for them to want to take this price down. We have Friday's low, obviously, so we'll see if the new week opening gap continues to be respected. Right, we have it here, like I mentioned on the other chart. We'll see if that can hold price, and if it does, then we start getting another punch lower. Trying to contest these areas. Maybe DXY does end up turning and doesn't have that SMT anymore. Maybe it gets up into this level and follows what the Euro did, because again, Euro and DXY are opposed to each other. But since we see the DXY fail to hit its fair value gap, and it's supposed to do exactly what the Euro does, just the opposite, right? Because it didn't do that, and we're also inside of a weekly bearish order block as well that could act as resistance. These are the things that are making me feel like, okay, it would be reasonable if price does want to end up smashing through this and then kick us back in and just totally leave this fair value gap. That would be the reason this fair value gap would get left, is if DXY and the Euro end up, just delivering how we want it to deliver. Like in this case, DXY just starts to crumble using this weekly bearish order block and leaves the fair value gap, while the Euro maybe gives us a nice rally. All that supports the indices continuing to go higher and not having to really dig down and maybe attack Friday's low or that daily fair value gap I mentioned as a possible target, right? So we're going to have to see what it does. If it breaks above this, again, that's when my interest kicks back in with possible buys, because there's a likelihood and a possibility and a chance for price to want to seek Friday's low here, which is right here. There's also an 8-hour fair value gap within the daily fair value gap that's down here. We started the week with this analysis here. I wanted to see it drop into this fair value gap. Then from this area, I would frame buy side delivery. Because again, our idea, our narrative, our navigation is rooted on what that higher time frame is doing. So if that higher time frame is retracing bearish, I'm favoring bearish if there is some kind of reason or draw on liquidity, like in this case, the fair value gap in the higher time frame bullish narrative. But once it gets down into here, that's when I can start determining, okay, I can maybe start to consider getting back in line with what that higher time frame is doing. Doing things from this way, excuse me, doing things with all these things in mind helps you stay connected to what the market's actually doing, so you don't get lost on the higher time frame. This is high level price navigation tactics, so you don't get lost, get lost in the wilderness like majority of people. So every day you have an understanding of what I could consider thinking about and what changes the idea, where price could go. We have more accuracy, more consistency in our decisions when it comes to identifying what the draw on liquidity is, while never losing focus as far as what the higher time frame is doing, because this is where the big money plays. And getting in line with this allows you to also have a more longer term bias and comfortability in that longer term narrative or direction in price overall. That also affords you the ability to logically frame out when price goes against that. And it tells you when to stop considering a particular direction, right? Like if it's dropping in a bullish trend, if it hits a point of interest that could reasonably allow price to start running higher again, once we're in there, you already know, okay, I'm not going to continue to push sells if we're in an area that could end up being bullish. Unless we lose this level, then we flip from favoring buy-side delivery and framing out buy-side scenarios to then, start framing out sell-side scenarios and then favoring shorts more long-term. Does that make sense? I hope I didn't confuse you guys. Some of the logic we're talking about here can be a little more advanced, especially for those that haven't had the chance to really dissect the concepts. But I hope that made sense. Yes? Okay. Beautiful. Beautiful. All right. Perfect. I'm glad. I'm happy when things make sense. Stuff can get kind of confusing. But yeah, so like I mentioned about this idea here, that was a possibility. I mentioned that, because this was an order block, another opportunity could have been presented here if it is going to want to run further into the new week opening gap, right? So again, that was another opportunity, right? This would have been missed. And I mentioned how you get back in line if you would have missed that. I said this would have been the opportunity. Yet another chance for you to catch the minimum 20 to 30 points. So think about how many 20 to 30 point opportunities we've been able to map out today. We've been able to map out 4 different opportunities, navigate all 4 of them, and figure out why they're valid, where things could go, what would invalidate them, the risks involved with these particular ideas given the current condition, the day that we're trading within. So I hope it's been easy to follow along, you guys, because we have talked about so many things that are so important. And if majority of the things that I'm talking about here have made sense to you, like you have no idea how much further along you really are. Okay. Like the things that, we talk about in these live calls, especially the last, 2 weeks. I mean, it's like just opening the whole entire, opening the hood to everything and how, I'm able to get on here and be consistent and in my private community send out accurate calls, like for the most part. I showed last year a couple times. It's in my highlights too. The 70 to 82% hit rate we had throughout the whole year. So I mean, if that tells you something, I mean, again, I post these things. People just got to go look. I don't sit here and shove my profits down your throat because I'm not a showboating individual. But even if you don't see that stuff, you just hop on here, for a couple months, you see like, oh my goodness, almost every single time we get on, there's something to get in line with. And almost every single week, we're in line with what the market's actually going to do. So yeah, we'll see what happens at this new week opening gap. This could very easily end up being the catalyst that ends up pushing price lower if DXY, of course, decides that it does want to get up into this fair value gap. If that's the case, then obviously we will see the daily fair value gap that we've been mentioning down below here. That would then end up getting targeted. And then, we'd use things like this inversion fair value gap. If we move up, we could find like this one. We could then use this type of area here to continue to confirm a narrative in terms of price reaching down into here, or a bias with price possibly trying to get down to our level that I would actually really want to see. But given the S&T and all that, I don't think this is going to end up getting down there. I think that this is probably just a retracement here. Again, I wouldn't fully be interested in trying to engage this because of the new week opening gap's ability to hold price and the possibility that we do have a deeper level we could reach into, considering that it's been so bullish and it's reasonable for them to reach down here. Plus, of course, it's a day after a holiday, so we hold off, right? It's best to hold off. But again, clearly, sometimes the rules will make you miss opportunities. I mentioned in the last call we did, the pain of regret is much worse than the pain of discipline. Right now, we're showcasing real time the pain of discipline and following your rules the way you outline them. Well, at least my rules, right? Because that's all I'm able to show is what I do, my rules, the way I think, things I choose to operate within. It's much better than the pain of regret, which comes from overtrading, not following your rules, over leveraging. That sticks around for a while. You missing an opportunity, you get over it in probably like 20 minutes after the market, after you get off the charts. You don't even worry about it. But if you deal with the pain of regret, that can carry on for months, sometimes years, especially if you really hurt yourself. It's unfortunate, and it's totally avoidable and unnecessary. All right, so yeah. So yeah, for the most part, we've kind of achieved what I wanted to achieve today in terms of teaching and different topics I wanted to talk about and showcasing navigation and all that stuff. We kind of got past the silver bullet window. Generally, I close up shop around this time. A lot of times, if I already made some money before 8 o'clock is done, a lot of times that's when I close out as well. Whoops, camera's all messed up. But yeah, I really hope you guys learned a lot of meaningful things today. I hope some of the opinions and perspectives I share with you guys has been allowing you to confidently push forward, maybe answer some of the questions you've had over the years that haven't been answered. Whatever the case may be, I'm on social media, on these live calls, just to provide value. That's, at the end of the day, that's the main goal. I want to see you guys succeed. I appreciate the time you give me, because out of everybody in social media land, in YouTube world, there's so many voices, so many bigger influencers, so many more people trying to fight for your attention. And the fact that you give me your attention is greatly appreciated. And I hope that I'm doing my part in providing value so you feel that your time is well spent here. And I hope it will continue to be that way, because I'm going to do my part, and I hope that it continues to allow you or help you as you push forward and try to achieve the goals you're looking to achieve. All right, but yeah, with that being said, let's just do one more round as far as what we see in price. get a landscape observation real quick. Again, we got these equal highs up here. My overall favor is for price to go higher. We have this large wick. Notice how the behavior is around this wick here. We're going to continue to monitor and see how that behaves. I do favor price going lower to go higher. Whether it drops down into this fair value gap here and goes higher, or if it just eventually, in this case, maybe even in PM session, decides to want to start its rally higher, given the fact that DXY is clearly looking like it's having hesitance and respect to this weekly bearish order block I have labeled, given the fact there's SMT between the DXY delivery or not delivery into this fair value gap, DXY failed here. While the euro hit it, there's also SMT between the GBP USD and the Euro USD in conjunction with that. That's a strong bullish characteristic. And then we also have very obvious buy-side targets that price could look to want to seek. So we'll look and see if that's going to continue to be favored. And then again, if that's going to take place, our justification internally on the back end for that, in terms of what the other markets are doing as well, we should be able to see this hold in price. It should not break through the midpoint of the line in the sand here, which is the order block midpoint. It should be able to stay above that, preferably stay inside of this particular level with all these overlapping fair value gaps. Hopefully it can stay above that. If it does that and continues to rise, that supports the overall assumption with the currencies we talked about, GBP and Euro, as well as the DXY and the indices. And then if we see this hold as well within this group of PD arrays and volume imbalances and new week opening gaps, along with this order block too, it's an order block. We have also overlapping fair value gaps, and we also have an inversion and a volume imbalance in here. So if these can hold us, like if we could break through it and hold and continue to support the downside move, that supports DXY being yanked to the downside, which again supports bullish currencies and bullish indices. And now something changes within that sequence of events and that price delivery between these different assets we use to validate and invalidate particular ideas or directions. Unless something changes, we're going to stick to that. And because we're rooted on this higher time frame, we're submitting to the fact that things don't change unless something changes on these time frames. And this is our overall roadmap. This is our storyline. And I'm going to leave y'all with this. ICT mentions over and over, because he gets asked this question a lot. He's answered it multiple times, but many people either don't get a chance to see it or hear it, or they're focused on one topic or a couple of topics that, they kind of disregard what he says in this regard. But he's asked the question all the time, where do I spend the most time? And like in his analysis, what does he look at? Does he look at the 1 minute, the 5 minute, the 15 minute, 20 minute, hour? What time frame does he spend the most time on to get the best feel for what the market's going to do, to build confidence behind an idea? It's on the higher time frame. The monthly, weekly, and daily time frames, even the 8 hour and 4 hour, he spends more time there than he does on the entry time frames, because the influence the higher time frame has and the skill set and superpower you get in terms of price navigation tactics from the higher time frame, right? When you can take that to the lower time frame, it gives you a superpower. Higher time frame navigation, spending more time there to derive your narrative and identify the bias, because bias changes day to day because of retracements. Narrative is more long term, right? The stronger you are with that skill set, the more time you spend there, the better you get with that, the better your lower time frame navigation will be, and the more trust you'll have when you're trying to identify possible directions and whether something's going to hold or not. And you use that information, like you master that tactic and submit to that, and then you take it across these other assets that I show you guys that are important, that I prove to you are important and impact the particular assets we operate within, which is, for entry, we talk about Nasdaq and SP. The more you're able to keep that process and master that process, like keep that in lock, intact, and continue to march forward with that, the better served you'll be, the more accurate you'll be, the more consistent you'll become over time, obviously. And the more likely it is that you'll succeed. And that's, of course, aside from the psychological things we talk about, which, of course, you want to spend time there as well. But in terms of analysis, where you should spend your most time, what you should spend the most time mastering, is your navigation skills on the higher time frame, how to derive narrative there, which is something we talk about every day, every Sunday, every time we're live, and mastering your one model, right? Your one model, because like we proved today, there's multiple chances to enter one model. You can have one model and it can be justified throughout the session. Missing one setup doesn't matter, right? So higher time frame, one model, learning how to keep this sequence intact, okay? And then obviously risk management. Those are the main pillars that will push you to success, or at least consistency. No one can guarantee you success, but these are the key core elements that allow me to trade and navigate and do the things that I do. All right. So yeah, with that being said, if you guys have any questions about any of those particular aspects of things, let me know, and we can cater Sunday lessons, or I can cater recorded video lessons on particular topics that you guys feel are a weakness in your particular approach or way of doing things. All right, you guys, so I just want to say again, thank you so much for the time you spend with me. I appreciate your attention when you could be anywhere else. You choose to be here, and for that, I'm eternally grateful. I hope you guys get value from all the content I provide. If you haven't already, definitely like the video. Share with some of your friends that you think can, get some value, or even be an asset to the chat when we're live. That's also very much encouraged and appreciated. And yeah, if you guys have any questions, just let me know. Otherwise, I'll see y'all next time on Sunday. Be safe the rest of the week. And yeah, hope y'all have a good rest of your day. Appreciate it.